Now, Walmart, ironically, was a stock that I missed most of the time. And I think part of the reason was that he was down in Arkansas and he was building stores there in Texas and Oklahoma. And I'd never been in a store. It was an obscure, little-known company. And incidentally, the institutions and the analysts were not covering this stock in the first time it doubled or tripled. So it was coming out of nowhere, and there wasn't too much known about it. I did buy it at some point, but it was a lot later on, and I don't think I handled it too well. And this is going to sound real funny because it's an irony. I think in the 1980 run-up, there were 2 or 3 other stocks that were really strong and active and acting great, and I was in some of those. And I looked at this, and it seemed like every time you turn around, they're building another base. So I'm in a bull market, and it has one base and runs up a little bit and another base and runs up and another base and another base. And I'm looking at this as a slower stock than something else that I'm buying. So you've got a choice, and if you're in a strong bull market, there may be something that's running up at a faster rate, and that was the situation there, which is hard to believe, but that has happened on occasion. I don't think I attributed back in those days this super cycle concept. I'm just looking at, hey, there are bear markets and market corrections, and there are follow-through days coming out of corrections. Most of the bases are built during market corrections, so you don't want to get discouraged when you see a market correcting. And you can see very easily on this next stock, Walmart, that there was a base coming out in September of 81, and there was a base in March of 82, and there was a base in June of 82, and every time there was a market correction that made those bases. But it was a base on top of a base on top of a base, and when the market stopped all these corrections, it takes off and really runs. Back in those days, I don't think I quite understood the concept of base on base on base. I would look at it and say, well, this is something that never seems to get anywhere, but it's because the market is forcing it back into another correction. And once the market gets going, of course, Walmart takes off and it triples in price very rapidly. But you learn as time goes on. And if you're not learning and getting smarter and better, well, then you're not spending much time with it, or you're not too serious. So you have to learn by mistakes. It took a long time to realize that a base on base might be a sign of real potential, because on the base on base, usually it's because of market correction, and the market correction is making a new low, but the second base, and that was the one that's on top of the prior one, it's not making a new low, it's sitting on top of that. So you got a major divergence that when the market rolls over into new low ground, this one doesn't go into new low ground at all, it's holding up above it, and it's that counter play that tells you as soon as the market correction gets out of the way, this stock is going to be a leader. And of course, we had 3 corrections there on Walmart that started back in 80, and it went all the way until the end of 82. So you just had nothing but market corrections, one after another. And you could have gotten worn out, but as soon as that was out of the way, the stock triples. I'm always going to be trying to buy when it comes out of a base, it's breaking out at a buy point. The market correction, the stock is building its base, going sideways back and forth, and as soon as the market follows through, it'll probably jump out of there in that first week or second week. That's when you're buying it. And if you get into that, the worst thing, if it runs up a little bit and then starts building a base, you'd have to know the stock well enough to sit through building another 3-month base on top of the other one without any real progress. And if you got impatient and sold the stock, you'd have to buy it 2 months later. That brings up an interesting point. You don't want to worry about what you did 2 weeks ago or 2 months ago. You're just assessing the market at the time and place. And even if you did something dumb and sold something you shouldn't have, if you need to buy it back 2 points higher but the time's right, you do that automatically. The market doesn't let you do just everything you want to do. It does what it wants to do, and you've got to find it and follow it and act and not get hung up on, well, gee, I sold this 3 weeks ago or 3 months ago, and now it's 4 points higher. What does that have to do with what's going on in the market? It's just your emotional feelings. Pride and ego, and the market, if you're in it long enough, you won't have too much of an ego.